Now, this is the section that ought to grab everyone's focus. While COMEX silver is at $95, Shanghai silver stands at $136. The premium in Shanghai just reached $36, a record high we've never witnessed. Physical silver in China is going for 37% more than the paper version in New York. Let me repeat. Physical commands a 37% markup over paper. This safe haven commodity is showing volatility akin to cryptocurrencies. Silver plunged $20 from $115 to $95. Gold shed $4 trillion in value within a day. Silver lost $1.1 trillion. This represents intense fluctuations. It's forced selling. It's the futures market crumbling from excessive borrowing, even as the tangible market sends a contradictory signal. And on the topic of the tangible market, look at these proportions. The gold to silver price spread climbed to 51 to 1. Gold costs 51 times what silver does. Yet the extraction ratio is 1 to 8. For each ounce of gold dug up, 8 ounces of silver emerge. The COMEX storage ratio is 1 to 12. For every ounce of gold held in COMEX, there are 12 of silver. The LBMA stock ratio is 1 to 3. So, silver is extracted at 8 times gold's pace. It's stored at 12 times the rate in COMEX and trades at 1/51st the cost. Does that add up for anybody? And the real surprise, silver stockpiles are depleting daily. Supplies are dropping as the price spread widens. Piece it together. Now, let's discuss what sparked this plunge, since the schedule seems dubious. Reports indicate gold and silver declines began when trading kicked off in China. Then, the London Metal Exchange cited tech problems and postponed its start. Silver tumbled $20 from $115 to $95, exactly when the LME delayed. Just glitches, huh? The LME holds off, and silver dives deep. No major economic updates are fueling this, aside from Trump's anticipated FOMC head selection today. That's the trigger everyone's eyeing. If Trump chooses a standard Fed leader, markets could steady or keep declining. But if he shocks with Judy Shelton as Fed chair this afternoon, gold and silver might stage a strong same-day recovery, signaling the close of long-term price control. Let me outline who Judy Shelton is and why her possible role would rattle the financiers. Shelton is an economist, past Trump Fed candidate, and a leading voice for stable currency today. Her views question the core of the paper money setup. She pushes for a gold link to limit rising prices and borrowing. She suggests gold-linked bonds to ease back to reliable currency. Her concepts threaten the Fed's endless cash creation. In a gold-linked system, the dollar's worth is fixed to a set gold quantity. Price increases are capped since currency expansion ties to held gold. Public debt can't balloon because outlays are bound by actual assets. Currency steadiness returns, boosting trust in money's enduring worth for people and firms. When Trump put Shelton forward for the Federal Reserve in 2020, her bid met fierce pushback. Why? Her views hinder the Fed's capacity to churn out trillions for bank rescues and asset bubbles. A gold-tied approach would curb tampering and demand Fed responsibility. Her bid was halted by a slim Senate decision, but her concepts have built support. Lately, Shelton floated gold bonds as a bridge to stable money. The U.S. Treasury might offer bonds valued in gold, not dollars. Holders could cash them in gold when due, dodging fiat erosion risks. This would build a side market rooted in true worth, promoting budget discipline and shielding from price hikes. Gold bonds wouldn't swap out the dollar right away, but would pave the way for a shift to reliable currency. If Trump selects Shelton as Fed chair now, it would indicate a core change in currency strategy towards stability, ditching boundless printing. The effects on gold and silver would be huge. The futures control system would meet a survival crisis. Years of value damping via contracts and focused bets would face official challenge from the Fed. That's why today's reveal is key. That's why this drop's timing raises eyebrows. That's why silver was slammed just ahead of a possibly transformative Fed head choice. The financiers aim to convince you this is silver's true value. It isn't. A $36 Shanghai markup reveals the actual cost. A 51 to 1 gold-silver spread versus 1 to 8 mining tells the true value. Stockpiles emptying as paper value tanks shows the real cost. But here's what many overlook. In our prior video, we mapped these precise chart points, and they're happening just as we described. The 150-hour EMA supported at first with a 10% rise from 108 to 117, then it gave way. We noted if it fails, we'd hit low 90s. We're at that spot, probing 90-95 backing. If this endures, we climb. If it cracks, 86 follows. The blueprint is materializing spot on. But this differs from all past silver drops. The tangible market isn't trailing the paper one lower. Shanghai markup at $36. That's unheard of. In earlier falls, markups would shrink or flip negative as real sellers freaked. Not now. Markups are surging. Asian physical purchasers pay 37% above COMEX spot for metal. They're not frightened. They're snapping up the drop boldly. They recognize this paper value is make-believe. Betting against won't fix scarcities. It'll amplify them. The financiers are sealing their fate. Each buck they drive the price down, the Shanghai markup grows. Each ounce they bet against on COMEX, the real market takes in and calls for handover. Each attack they launch, Asian buyers push stronger. Control is slipping, and they sense it. Now, let's cover the potential pitfalls, as after a 22% drop, realism is needed. We've fallen from 121 to 95. That's a major pullback. If 90 to 95 backing fails, we might hit 86 or less. The chart harm is genuine. Short-term drive is negative. If you're using borrowing to trade, if stops were close, you were ejected and wiped out. The swings are too wild for high borrow positions. 1.1 trillion in value gone in a day is a wipeout chain. Debt calls trigger, mandatory sales occur, timid holders bail. That's trading truth here. And another hazard. If Trump opts for a standard Fed head over Judy Shelton, if no currency shift happens, the futures tampering might persist. Financiers could drive silver down further. More chart failures could emerge. Deeper points might get probed before a true floor. Bitcoin's also tanking to a 2026 bottom of 81,200, off 6.3%. Digital coins are dumping, equities soft, gold under 5,000, everything's pressured. If this is a wide risk avoidance shift, if funds are scarce, safe metals could lag short-term, despite their refuge role. But here's why these pitfalls, though valid for traders and near-term moves, don't alter the core real market argument. The $36 Shanghai markup is the biggest ever. That's not weak interest, it's frantic need. Real buyers will fork over 37% above paper spot for genuine metal. They're jumping ahead of the crunch. The 51-to-1 gold-silver spread against 1-to-8 extraction yells that silver is hugely cheap versus gold. When this spread stretches so much, it usually rebounds sharply. Silver beats gold on recovery, and we're at a peak extreme in recent times. Stockpiles are emptying, COMEX holdings are falling, LBMA stocks are strained. Shanghai draws metal east at $36 extra. The real market is squeezing. As paper crashes, this gap can't endure. One outcome: either COMEX value climbs to match Shanghai, or COMEX pricing loses trust and Shanghai sets the tone. And what backs our breakdown? In the last video, we pinpointed these chart spots, and they're executing move by move. The 150-hour EMA held early with 10% lift to 117, then failed. We said if it goes, low 90s next. We're checking 90-95 currently. If backing stands, we advance. If not, 86 down. The chart guide is spot on live. So, where are we? 3 main points, then done. First, the chart spots from the prior video are executing flawlessly. 150-hour EMA backed at start with 10% rise, then cracked. Price hit low 90s as foreseen, now probing 90-95 backing. If it lasts, we rise. If not, 86 next. The chart plan we detailed is happening just as said. Second, the real versus paper split hit a peak extreme. Shanghai extra $36. Gold-silver spread 51-to-1 versus extraction 1-to-8. Stockpiles dropping as price falls. This isn't a flawed system. It's futures tampering clashing with relentless real need. Financiers bet against lax, and it'll heighten the crunch ahead. Third, Trump's Fed head choice today might spark it all. If Judy Shelton gets it, her push for gold tying and gold bonds is a deadly blow to futures tampering. If a standard pick, the fight goes on. Anyway, monitor today's reveal. The open query: does 90-95 backing stand or fail? If it stands and we recover, does a Judy Shelton Fed roll speed the upswing, or do we get more chart harm with drop to 86 before real facts finally trump paper lies? We're at a pivotal turn. The chart spots we flagged are under test now. The real market is at max split from paper, and a possible strategy bomb could land today, confirming what stable money backers have claimed for years. Stay alert. Track these spots. Track the Fed news. The coming shift might be landmark. Do your research, know the dangers. If you're high borrow, these swings will ruin you. If you're stacking real and grasp the big shifts, this might be the flush out pre-true surge. We'll see. Act with reason, not buzz.